This is Sarah Junick with Drilling Contractor. I'm at the 2019 IADC World Drilling Conference in Milan. I'm with Tom Kellock. He's the head of offshore rig consulting with IHS Markit. Tom, thanks for being with us today.
My pleasure.
The current environment for offshore drilling contractors is unsustainable. How bad is it, and what can be done about it?
It's pretty bad. I mean, the major contractors lost a aggregate $12 billion in 2018, although some of that was non-cash. Day rates are barely enough to cover operating costs for many contractors at the moment, unless they have legacy contracts dating from a few years ago. So the situation is pretty dire in terms of their ability to maintain their heads above water right now financially.
Why is the rate of improvement so slow in the market?
Maybe two reasons. We have an oversupply of rigs, and while there has been significant attrition over the last few years, we've also had new rigs that were ordered during the boom times still coming into the market. So we still have a major imbalance between supply and demand, and that, of course, affects utilization, which affects day rates. So day rates are basically too low for this industry, really, to continue as is.
What else can drillers do to improve the market?
Further consolidation is always helpful, and we've seen a lot of that, or quite a lot of that already, with Transocean and Ensco being the two main movers in that area. So more of that would be helpful. It's not always easy because the financial markets don't always see that as a good thing for the individual companies concerned, although it's a great thing for the industry itself. So more consolidation, more retirements of older rigs to bring supply and demand into balance, but both of those would be very helpful.
So financial backlogs are no longer a good indicator of the market. So what would be?
That's quite true. I mean, in the past, you could look at the financial backlog of revenues from existing contracts and assume that roughly half or maybe 60% of that would work its way down to the bottom line at some point. But today, with day rates being very close to operating expenses, it really doesn't tell you very much unless you dig into the background of the individual contracts. Probably looking at contracted time, right now we are starting to see the growth of contracted backlog time. That is helpful. It means that rigs are going to work and going to be working longer than in the past. It doesn't necessarily help financially, but it is definitely a positive indicator for the industry as a whole.
So why is the rate of improvement so slow in the market?
Several reasons. First of all, demand is only growing very slowly. Secondly, the imbalance between supply and demand of rigs is not improving very rapidly. On the supply side, while we have had significant attrition, we are still seeing new rigs entering the fleet that were ordered some time ago. Probably one of the assumptions behind the ordering of many of these rigs was that they would replace older rigs. But we're still seeing a very significant number of older rigs at work. Something like 30% of the fleet currently contracted were originally built more than 30 years ago, and I think that has come as a bit of a surprise to people who ordered the new rigs. At the same time, many people thought that rigs that had gone into cold stack would never come back, but we're seeing drilling contractors reactivating those rigs probably under budget and more quickly than they thought perhaps was going to be possible. So the supply side is maintaining an unhealthy level of rigs at this point.
Thanks again, Tom, for joining us today.
Thank you for giving me this opportunity.
And thank you for watching drillingcontractor.org.